Hello, dear traders worldwide. This is Gabriel here. Welcome back to my channel, Forex.Real.Trader coaching sessions. And once again, thank you so much for the support to my channel. Today's video continues with module 4 about money management, and we will learn about basically something very important, and it has to do with risk to reward ratio plus the ATR tool, okay? A combination in order to set proper trades, right? So let's first define what the risk to reward ratio means. This is the RR. When we trade, we always aim at what? At profiting, of course, more than we risk. Simple like that. Okay. So let me show you on the charts how we do it. Let's suppose that I want to trade this very pair, American dollar versus Japanese yen. So said that, for instance, my entry point is here, right? This is my entry. Remember in our previous video, I told you how to place it exactly, right? How to place the trades in the proper way, okay? So here, let's suppose that is my entry point, and my take profit is gonna be around here, okay? And my stop loss is going to be, say, for example, here, right? When we talk about risk to reward ratio, okay, basically the objective is this. My stop loss versus my take profit. My stop loss is 1R and my take profit is 2R. What it means? Remember in the last video, we said that if my stop loss is, for example, 10 pips minus 10 pips, right? What I am willing to risk. So my 2R is the double. So it's basically 20 pips, right? So like this. If I do something like this, what I just traced in here is illogical, right? Is not really the way that we have to interpret the proper trading. Because in this case, here is completely opposite. Because I'm risking from my entry point to my stop loss, I'm risking minus 87 pips, right? And I am looking for profiting 28 pips, right? So that is not proper, right? That is not right. So if I want to make something like this, this is definitively something that is wrong. Why? Because in case this trade goes in my way, I will make 28. But if it goes against me, it's going to be 87%. Okay. Apart from that, I am risking here 3% of my capital, right? So I need to be very careful and very organized in the way that I set my proper trading strategy, right? And my risk to reward range. So that is exactly what we're going to do right now, right? So how to place it and what are the real tools I'm going to use, okay? So let's first understand that this is not, I'm not telling you that we have to trade based on this, just that I observe the chart is somehow going up. No, remember, I always place my trades based on my sound plan, on my proven plan. Don't worry, in the course, I will give you different strategies that you can implement, adapt, right? Or discard. Is up to you. But the point is that we always follow strategies with discipline, strategies with a method, right? So look at this. let's correct this thing in here. The very first thing to do is to calculate, right, my entry point, okay? So my entry point is going to be, let me delete all this. My entry point is gonna be after I analyze the market and everything in there. So I determine that my right moment to enter is here, right? Let's suppose, right? So this is my entry point. Okay, now comes the thing. What is the sizing? In the previous video, we learned how to do the proper sizing. Let's do it again in here. So my account balance is 9,726, right? So let's move forward to our tool. Remember, I'm going to set this one in the description of the video as well. So I am trading what? I am trading American dollar, Japanese yen, right? So I use it here, Japanese yen. All right, that is my instrument. Okay, my pair is this one. The account size. My account is 9,726. All right, so 9,726. All right. The ratio. Remember what we talked about in the last video? That we said that maximum per trade, I'm going to risk 3%. All right, so I'm going to risk in here 3%. Okay, on this very trade. And that is my rule. Either 3 or I can even say 2%. Okay, my stop loss in pips. So then is the moment where I calculate. So if I see that there is potential here, right, for my trade to go, for example, here to this point, because I analyze different tools and in my trading plan. So I forecast, right? And I think that the market is going to touch this pivot point, right? On this point, on this very area of 148,591. How many pips do I have in there? So I use my crosshair tool, set from my entry point and move it there. And I can see that in this moment, there are around 93 pips, right? So if those are 93 pips, I can say that I can aim at 37 pips. But those are just, mental calculations. But how I can do this properly? That's where my ATR tool enters in the game. So this is the ATR. So you can take it from inserting indicators, right? So you come here to the oscillators and here average true range, and you trigger it, activate it right away as it is in the platform, and you can see this thing here. So what happens? Using the crosshair, you can observe that there is a number 0.24, 0.274. Let's see here. So 0.274. Okay, that is the ATR in this very moment. What it means? That the volatility and the movement of this currency pair in this very moment is a movement in average in 14 periods, is a movement of 27 pips, right? So that is a first calculation for my stop loss, right? But I'm not going to place it at 27 pips. No. The rule says that I'm going to multiply the ATR. So this value here, this 0.274, but I focus on 27 pips. So my ATR times 1.5. That result is going to be my stop loss distance, right? So that's it. Let's calculate it. So I use my calculator here. Okay. So let me check that I have 27 pips. So that is 27 times 1.5 equals 40 pips. So my stop loss is going to be 40 pips, right? 40 pips, 0.5. Let's round it to 40 pips, right? Okay, so let's see how we calculate it here, okay? So now I set my tool, my crosshair here, from my entry point, drag it down, 40. 40 pips is here on the price 147.238. All right. Here. 147. Around here, let me confirm. So here again, 40. Okay, 40 pips is here. 47228. 228. Here. That's it. So now I have here my calculated 40 pips. So this is my stop loss. My stop loss is 40 pips now. And is according to the market. It's not an speculation or that I just happen to place it there. No, I use a strategy. The strategy is what? My ATR tool, right? I read it here on this very moment. The volatility is telling me that the movement in the last 14 periods is around an average 27 pips. All right. So my ATR, that is currently 27 pips, multiplied by the rule of 1.5, that is going to give me my stop distance. And that number is 40 pips. All right. Clear there. What is the next step? I go back to my tool, right, to my website. And remember that I already said here the pair that I'm trading, the size of the capital that I have in my account, the risk that I'm going to take for this very trade, that is 2%, and the calculated stop loss. So my stop loss is 40 pips. So I tell it calculate. So for this very trade, look at this. My lot, okay, or the size for my trade is going to be 0.72 lots. This number is very important at the moment of trading. So, trading in this very moment. So let's place it now. Okay. So I right click, trading, new order. Okay. Remember that we never trade directly with the market. We always set it not like a market execution, but as a pending order. And this pending order, because I'm going to buy above the current price, is going to be buy stop, because the current price is below, right? I cannot buy in this one. Or okay, I can, but I must not, right? The idea is to always be patient, wait for my pattern to be confirmed, to be closed, etc. And I trade it. And my price is right here above the market price. So I set it as buy stop. Okay. What is the current price? 147 point. So remember what the numbers that I hit in here are these ones, right? Look at this. This one here is my entry price. This one here is my stop loss. And this price here, right, is what? Is my take profit. That's what I'm doing right now in this month, okay? This is what I'm doing here. Let me erase this, and this. Perfect. Now, so the price is 147.634, and my entry point. What is my stop loss? My stop loss, 40 pips, right, away from the entry point, calculated with the current ATR under rule, is 147.228. And my take profit, right, is currently 140, the one that I said, no, 148.562. Look at this. The button is blue. It means that the trade is, okay, can be placed with no problem. So let's place it. Something important. I was going to place it, but I didn't change this one, the volume. The volume is what? The number that the website calculated in order to risk my 2%. So for 2%, I use 0.72 lots. If I want to risk more, say for example 3%, these lots increase because I'm risking more and leveraging more. So let's see. Look at this. Now, if I risk 3%, I can do on this very trade a trading with 1.08 lots. But if I am very responsible and I want to do 10% only with this trade, I can trade it with 3.59 lots. So I was about to trigger it with 2.43 lots. No. I am risking not 10%. I'm risking 2%. And according to the calculation, that number is 0.72. Okay. So I come here, check 0.72 lots. In that order of ideas, I place it. Now I delete my lines and look at this. Now I have my trade properly placed. Something that is my advice in here. Look at this. The risk to reward ratio somehow is disbalanced. Why? Remember that my stop loss, in this case, my stop loss, okay, is 1R. Okay, I already calculated, right? And that R was 40 pips. Okay. My take profit must be 2R. So that is to say that I am aiming at 80 pips. Of course, I can calculate it for 3, 4, 5R, but I must be realistic, right? I cannot be greedy. Okay, I have to place trades that are logical, that the market, according to the movement, according to the breathe out and breathe in of the currency pair, is going to reach that level. Okay, but let's see the R in here, the reward, is accordingly or not. Remember, here from my entry point to my stop loss, there are 40 pips. And here I have right now 92 pips. It's kind of far from a realistic perspective. So I can move it, right? You can move it. You can adjust it. So let me adjust it to, let me see here. Let me move this thing from here to here. And let's see where I get 80 pips. So 80 pips is around this area of 148.43.1. So what I do, I click this line, my take profit, sustain it, and drag it to the place. So it's around here. Then I recalculate it to confirm I have my 82 pips. So 80 is around a little bit, 431. Here, that's it. Now I have a proper ratio. What is that? That I am in my stop loss. Here, my stop loss is 1R. So I am risking 40 pips, right? 40 pips in order to make what? In order to make here a 2R that is 80 pips. And everything was calculated. Anything here is based on a speculation. No, everything is following rules. Now, if you see pricings here, look at this. You are potentially looking for $386.60. That is my take profit potential, right? So when the price reaches there, and I am risking Right now, I'm risking $198.55, right? So what happens? Remember, in this moment, the trade was placed as a buy stop. It means that when this candle or any other candles reach my price, okay, it's going to be triggered. And here you start to see the movement of the money, right? So, okay, let's suppose this one continue up, more. Okay, a little correction here, more, and reach here. In the moment this candle hits here, my take profit is hit, and I'm going to make my positive, right? My positive money. But if, for example, the scenario is different, right? And okay, it is triggered here and then it comes down. Okay, tries to go back up, and comes down, and touches here. All right, I'm going to be stopped out with minus 40 pips. But those minus 40 pips are my 3% that I was willing to risk in my trade. Okay, that's the way how we calculate, okay, our risk to reward ratio, and the way how we calculate our stop loss, right? It's so simple. It's just a matter of technique. It's just a matter of discipline. Remember, your money is your most valuable capital. So you need to be responsible in every trade, in the moment of placing every trade, right? So just again, right, as a little reminder, if you find the channel and all information that I providing here is something interesting and useful in your learning process and trading abilities, please subscribe, like, and share. Thank you very much for your support, and see you in the next video with more information. Thank you very much.